There's so much going on. First of all, how often do you look at the share price? Because it's just been going down and down and down, and I imagine that's very difficult on a daily basis to explain to staff.
Sure, of course you look at it from time to time, but actually we are where we are. Share price was coming down for quite a while, actually for many, many years. We are very much under pressure. When you do a capital increase of 4 billion and your market cap is 10, 11 billion, okay, you know that the share price will go from 4 to 3, maybe even lower, and we are where we are.
But there's a rights offer, and actually what happens if the share price goes below that?
No, the rights offer is fully underwritten, and we are well underway. We have 2 tranches. The first tranche was with the direct investors, so 1.8 billion. That is already done and on our accounts. The second one is ongoing, 2.2 billion, and will conclude next Thursday.
Okay, what happens though? Have you had conversations with investors that bought at a higher price, and how unpleasant are those conversations with them?
Well, look, of course, that's never easy. We have quite a lot of roughly some 10 key investors. They are long-time investors. They are not pleased where the share price is, of course. But they welcome our plan to transform the company. They have a high belief in the credibility of the management team. So they are standing by. But they are somewhat impatient. They want to see the change. They want to see us executing, and exactly that's what we are doing.
So what kind of conversations are you having with them? Are you confident, first of all, that the share price after the rights offer will go up?
Look, we are at 0.2 or so price to book. All our peer companies in our sector are roughly hovering around book, slightly below, slightly above. There's no reason that we cannot catch up and go back to that level. I cannot predict when that is happening, but the upside potential is huge.
How much? So what I'm trying to understand, what a lot of people are trying to understand, is that every day there's bad news on Credit Suisse, and you see staff leaving, you see investors unpleased. How do you recapture that narrative?
Look, we had, beginning of the month, we had that social media storm that had a huge impact on, interestingly, not on the institutional side. Professional investors understood there was a lot of rumor spelling, but on the retail and wealth management side. So we reached out. We reached out to 8,000 wealth management clients. They are covering roughly 80% of the assets under management. We reached out to more than 24,000 clients on our core market. So we intensified the dialogue. Just to make sure they understand where we are, and just to make sure we maintain the contact. But
what was the feedback like? So if I'm a new client, if I'm an old client, why would I put 100 million with all of the uncertainty surrounding Credit Suisse?
No, the feedback is quite astonishing. The clients still like us. They continue to do business with us. So we had basically very few clients really leaving. They might have, in light of those rumors, withdraw, some money from us. But I'm confident. I have a lot of personal discussions with clients. I know from regional management, that money, when we do well, will come back, at least to a significant part.
When do you think the outflows will stop?
The outflows basically have stopped. What we saw is 2-3 weeks in October, boom. And since then, flattening out, they have stopped. It's gradually coming back, in particular in Switzerland.
A number of analysts are also talking about, what could happen to Credit Suisse. So are you evaluating other strategic options, given the share price dilution and the market reaction to your announcement?
Look, when you step back, we do a capital increase now. In 4 working days, we will have 4 billion with a CET1 ratio of 14% or close to 14%. That is top quartile in the industry. So it's a really strong balance sheet to carry through that transformation we go. So we execute our plan.
But why do shareholders not believe you? Why does the share price keep on falling?
No, I think the shareholders, core shareholders, they believe us, and they will exercise also their rights. The share price is falling, of course. The rights issues are traded, the market tries to drive down the price, which is logic, but it's fully underwritten, will be done. So the volatility on the share price will continue until we are through that capital increase. Then I think it will somewhat stabilize, and probably we just move on from there.
So Chairman, no plan B. Is there a plan B? If somebody came today and said, look, I offer you to merge 10 Swiss francs.
Look, as chairman, you need always to consider all. When somebody comes and would do that, of course, you need to take a look. But I tell you, when you are where we are, with the historically low on the share price, with a great management team, with a plan that is convincing the market, and the market, our shareholders believe it. It takes time to execute.
Yeah.
We can capture that value, and we will do so.
But going back to, there's also speculation about you selling some of the strategic, domestic bank. Again, when do we have a full picture, like a definitive picture of what Credit Suisse will be like in 10 years?
No, look, I think we said on October the 27th, we indicated three things strategically. We are going to radically transform the investment bank. So, with other words, we are drastically de-risking the company. Secondly, we go through a cost-saving program. Thirdly, we do the capital increase. And we always clearly indicated we go back to the core of where we come from. It's a Swiss, a global leading wealth manager. This is the future of the company.
Are you having to accelerate some of the job cuts and cost cuts?
Well, we are executing, I think, well. We indicated that we will reduce headcount by 5% in the fourth quarter. I think you will see when we communicate, we are well underway, and we are really doubling down on the execution. We try to accelerate. We said, for example, 2.5 billion of cost saving. We are definitely exceeding 1.2 billion up to the end of next year. So we try to front load and not to backload the implementation of the strategy.
Does that mean, actually, Mr. Lehmann, more job cuts? I know there was a story, for example, in Bloomberg about job losses and debt sales.
Look, we clearly said we will. Now, we need, I have to say, reduce headcount by 17%, so 9,000. This is definitely the plan. We'll achieve this, and when we change the plan and need to do more and want to do more, we will communicate it at the appropriate time.
And you're front-loading some of the cost cuts also to please investors. I don't know how often you're communicating, for example, with the Saudi investor.
No, we try to front-load even now in the fourth quarter. That's why we gave a profit warning for the fourth quarter. We try to accelerate some of the asset sales. Non-core unit is well on the way. We are working with Apollo also, on the securitized products, well on the way. We are also exiting some of those businesses. So this is all on execution mode.
When do you think markets and I guess analysts and everyone will give you a bit of a break?
Well, I cannot speak to what other people are doing, but rationally, I would say you are through the capital increase. You have a very solid capital CET1 ratio. I would suggest to look to other prudential measures like leverage ratio. We will add some 50 basis points to our already now. It's above 6%. It's probably one of the highest leverage ratios that you have in the industry. You look to our LCR. Now that is, we said 140. We indicated last week it was hovering around 120, 130. This week it went up to nearly 140. So these are very, very strong prudential metrics. So that will calm the market.
How difficult is it to retain staff?
It is obviously a challenge. We have so many people, 50,000. I think they are very much under pressure, very committed. We have still excellent people, and the good thing, we continue to attract and hire, I think, very, very strong caliber individuals. But it's something to watch closely, clearly.
But how do you attract them? So again, because the franchise is tainted, do you have to have difficult conversations with people?
It's interesting. Also, when I look to people we attracted at the board or in the executive committee, they see it's a great franchise, a franchise that is a little bit hammered, but they see the opportunity, they see the potential, and they think that is what attracting new talent.
But the worry, I guess, is that if you have Credit Suisse on your CV, does it make you then less applicable afterwards? Are these conversations that you have with people, or it's not a problem?
No. Look, we should not forget Credit Suisse is one of the best brands you can have. It's not only in Switzerland, but you go to Asia, you go to Latin America. I mean, it's a super brand and such a rich history. And in every time in life, we have ups and downs. Yes, we are not in the best shape, but we are getting back, and that is what people see, and that's what they believe.
So when are you expecting inflows to increase? We talked a little bit about the outflows and when you're expecting them to stop. How do you attract new clients?
No, I said I already see now. Anecdotally, when I speak to clients, I know, there will be inflows. We already see it partially happening. So we have plans to continue to reach out to clients. It might take a little bit of time, but it will, it will come back and we'll go back to normal. I think we just go now through a little bit that storm during the capital increase. When we are done, and then you start to work step by step. No rush, step by step, executing a plan, and then we are going back on track.
I know you have a lot of big investors, including David Harrow and others. What kind of conversations do you have with them specifically?
No, look, we are in regular contacts with them. What I said, of course, when you are for 20 years an investor in Credit Suisse and you see where the share price is, these are, challenging discussions. But, they see what we do, and what I really like, they really believe, this time it's not just managing something, organizing. It's a real. We put a line into the sand and said, look, things from a strategic and cultural perspective will need to change. We have taken bold actions and we are going to execute and have a new management team.
I mean, do you look at, and the parallels between, for example, Deutsche Bank or even other banks are frequent. Do you look at a bank and say that is the kind of turnaround that I can deliver for Credit Suisse?
What I take from other banks that have done it successfully is they develop the strategy, they stick to it, and they were executing quarter over quarter. This is what I look for. I think our strategy, our situation is unique, and we have a Credit Suisse way on how we develop that strategy.
Is it unfortunate? We're seeing quite a lot of market volatility. We're seeing a recession. Is that unfortunate for your turnaround plan?
Sure. I mean, it's not that easy. The market is turning against us clearly, and so everything you do might optically look a little bit worse, so we should not forget the whole industry is under pressure. So it's always the relative distance that you need to look at. But of course, it's always easier when there's nice weather out, when you do a transformation. That is clear.
Mr. Lehmann, I know it might be a little bit too soon, but you talked about hiring, for example, at Credit Suisse First Boston. Like, how do you see that franchise operating with main Credit Suisse?
No, what we said is Credit Suisse CS First Boston, we will put that up in a more separate entity, separate balance sheet, but this is a journey. That will take 2-3 years until we are there. Of course, we are in constant dialogue with regulators, in particular with the Fed, but it will be a more entrepreneurial model, highly competitive.
Mr. Lehmann, and I know you have other appointments to go to, so we almost need to wrap it up, but how often do you speak to staff and investors to try and retain them? I don't know whether you feel a bit like you're a psychologist in chief, but what's your job like?
No, of course. Look, I'm here to work and serve the company. Of course, as you can see, I'm quite often on the road. I spoke to investors here in London. I speak to clients in after-hour meetings. I have town halls. But I'm the chairman, so we have a great management team. Uli Kerner, his staff is taking care of the employees and is doing the detailed work. But obviously, I'm here as well and try to help the company to succeed.